Okay, good morning, everyone. As Salil said, I'm the Director of Research for BlueStar Indexes. I lead BlueStar's index operations, developing new index concepts, and also producing a lot of the thought leadership and supporting research to support our efforts. Eric and I are going to talk about how to define the Israel tech universe this morning. The fact that we're all here today, I think, means that this is an important topic, and then a lot of us see opportunities to make returns for ourselves and our investors in the Israeli markets. It's amazing, I think, that we're all part of the community of professionals who we're causing to happen something that many of us have really only read about in textbooks, which is what can happen to an economy when its capital markets become deeper and more efficient. In a few minutes, Eric is going to talk about defining the Israeli tech universe from the perspective of an active manager. First, I'm going to share a few reasons why I think a widely accepted benchmark for public Israeli tech stocks is vital to the industry's continued success. So look at what the Israeli tech industry has achieved with just a few tools at its disposal. The government subsidies for R&D, a vibrant VC ecosystem, and dedicated investor relations industry. And other things like number of startups per capita, engineers per capita, Mobileye, Neuroderm, Waze, $50 billion in market cap Israeli technology companies, that there are more than 300 international tech companies with major operations or R&D centers in Israel. There's all this great stuff out there about Israel's tech industry, but there's been no notion of an Israeli technology sector. Why? Because before the BlueStar Israel Global Technology Index, no one had ever really properly defined it. Without a widely accepted definition of the sector and a widely accepted benchmark, I think it'll remain in this sort of amorphous state. So a properly defined benchmark that integrates all Israeli high-tech companies will change the way global investors think about Israeli tech, from a mere topic of conversation to something that's real and actionable and something you can actually invest in. How amazing would it be if, in addition to analyst coverage of companies like Checkpoint and Wix as being part of the software sector coverage universe, those companies are also part of the coverage universe for Israeli technology sector. More importantly, is that without a widely accepted benchmark for the Israeli tech sector, it'll be difficult for Israel to attract massive flows of capital required to really scale up its technology ecosystem and its economy. About 3 decades ago, there were a group of investors and academics who had the notion of what an emerging market was, an emerging market economy, and that there was value to be extracted in emerging markets. But no one had yet pulled it all together. 25 years ago, the IFC World Bank launched the first emerging market index fund, and in the first year that fund existed, it barely reached $50 million in assets. Now there are trillions of dollars benchmarked to emerging market indexes all around the world. It wasn't until someone defined what the emerging market universe was that the asset class became a real thing for investors. Whether MSCI, FTSE, or Standard & Poor's have a perfect overlap, the same exact definition for what an emerging market is, it's not relevant. Emerging markets are so big that there's room for some differentiation. But the important thing is that emerging markets are now a thing, and it's accepted as a distinct sub-asset class, which can't be ignored in investors' portfolios anymore. And aside from a handful of us, maybe people who are experts in certain countries, parts of the world, who would even consider researching countries like Hungary, Chile, Colombia, Peru, let alone invest in those markets if they weren't part of a widely tracked benchmark? Think of the resulting volume and liquidity on those local exchanges due to the sheer number of assets tracking emerging market indexes, and not to mention all of the emerging market mutual funds and hedge funds that are also causing flow of capital to those exchanges and those countries. The same is going to be true for Israeli technology stocks. When it comes to Israeli public companies, we should no longer measure the success of Israel's capital markets by the listings or liquidity on the Tel Aviv Stock Exchange, because in fact we know that the pool of capital available to these companies extends way beyond the country's borders and beyond the Tel Aviv Stock Exchange. Imagine what could happen when local Israeli investors and investors around the world are able to refer to Israeli tech companies as part of a distinct sector, which actually reflects the reality of Israel's capital markets by including all Israeli companies, regardless of where they're listed for trade. Something that only really just begun when BlueStar launched the TA-BIGITech Index in 2013. and later adopted by the Tel Aviv Stock Exchange, we call now the TA-BIGITech Index. Because this was the first benchmark of its kind, we could have developed any rules that we imagined for it, but we wanted this to have staying power. We wanted this to be the benchmark for the Israeli tech sector for decades to come. So we needed to incorporate best practices of benchmark design and index development. There are a few key attributes for a properly defined benchmark. Two of them that were most important for us to consider. First, that a benchmark should be complete and that it reflects the full option of securities in the investment universe. The second is that it should be appropriate and reflect the nature of the investment's theme or style that investors are looking to gain exposure to. So we needed to start with the philosophy that this benchmark should reflect the global footprint of Israeli high-tech companies. And the rules we established are consistently reflective of this overarching principle. So BlueStar looks at factors like a company's percentage of employees or long-lived assets based in Israel. Also, if a company has a major R&D center in Israel. But those criteria need to be supplemented by some other qualifying criteria. So we look at additional factors like if a company is listed on the Tel Aviv Stock Exchange, if the company was founded in Israel, if it has a headquarter in Israel, and some other things that might be hidden in company annual filings. So investors can disagree with some of the companies in our index. And I'm sure that the way we define Israeli tech stocks is not exactly the same as the way that Senvest does. But for us at BlueStar, it's important that we have a consistent framework, which is now being adopted by institutional investors in Israel and investors in the US at an accelerating rate. So with that said, I'll ask Eric, basically, first I'll say that Senvest, I know, has been investing in Israeli capital markets for many years. I'm not sure when the Israel fund was established. I think over 10 years ago. Sorry? 2003. So, and early on, you also identified that the Israel investment opportunity extends way beyond what's listed on the Tel Aviv Stock Exchange. So, BlueStar, we need to follow our rules very closely to be credible as a benchmark. Your situation is a little bit different. So, if you could talk about the way you determine whether any given company fits within the mandate of the Senvest fund.
Yeah, thank you. So my name is Eric Sterling. I work at Senvest Management. We're a New York-based investment management firm in New York. We've been managing money for over 20 years, and we currently have over $1.5 billion in assets. Of the $1.5 billion, over $500 million is dedicated to Israel-related investments. And within that $500 million, we also manage a Israel-dedicated hedge fund, and by my colleague Robert Katz, who's been running the fund for over 14 years. And you know, when I think about the main points I want to make today, I think essentially it's that, one, the investable universe for Israeli securities is increasing in value. And two, it's not only do we look at TA's-listed securities, but we look at foreign listed securities that are domiciled in Israel. So as you can imagine, you know, being one of the first funds running a dedicated Israel fund in the US, one of the challenges we had over a decade ago was defining what the Israel universe was. So we set about a task of looking at the universe as it exists today and as it existed over a decade ago. And what we found was in 2003, there were over 650 securities that we would have classified as Israel-related securities with like an overall aggregate market value of $55 billion in US dollars. And we sort of break that bucket down into 4 different groups, one being TA's-listed securities, which at the time in 2003 and still today is the majority of the securities, but also there's dual-listed securities, there's foreign-listed securities that are domiciled in Israel, examples of that being Wix, Mobileye was another one before they were acquired by Intel, and then also this group of securities that I would best classify as Israel-related securities. And these are companies, as Josh mentioned, that have a rich heritage in Israel, whether it's an R&D center, whether it's a headquarters. And when I look at historical examples of companies like that, I think of companies like M Systems, which was acquired by SanDisk, which was then acquired by Western Digital. And that's an example of a company that we would actually consider Israel-related. And so we use that as sort of the baseline for what we consider the investable universe. So jumping forward a bit to 2012, we ran this analysis again of what the universe looked like. And what we found was while there was fewer securities, we went from about 650 securities in 2003, there was about 600 in 2012, the aggregate value of these securities actually increased to over 200 billion, a pretty significant increase over that 10-year period. And then if you look in 2017, again, while the aggregate number of securities may have declined a bit, closer to about 525 securities, we see continued growth in sort of dual-listed securities and foreign-listed securities, which now comprise over about 25% of what we would consider the Israel-related universe. And what I'd also like to say is that the aggregate value of all these securities is now approaching 300 billion. So I think it's pretty conclusive that how we define the Israel-related universe, the value of these securities has increased substantially over the 14 years that we've been actively managing money in Israel. And so I think what I find most interesting is why are we seeing growth in the number of companies that are actually listed on foreign exchange but domiciled in Israel? And I think it comes down to the fact that one, there's what I would consider a more sophisticated investor base here in the US that's more comfortable investing in NASDAQ and NYSE-related securities. And two, there's obviously, by listing on these exchanges, there's a greater access to capital and better opportunity for M&A. And I'd also like to think that when these companies list in the US, there's a different perception than listing in the TAs or on the TAs. And for lack of a better term, I think they consider themselves to be more mature and that they're ready to play with the big boys. And by listing in exchanges in the US, it's a reflection of that. So I think that that's a pretty good explanation of how we define the Israel universe. And turn it back over to you.
Yeah, so I actually wanted to ask one other question. In terms of sort of idea generation, when companies go public, how are you keeping track of sort of new companies that might fall under your purview or something you can invest in?
Yeah, so we obviously spend a lot of time focusing on publicly traded companies, but given the high-tech industry is so prevalent in Israel, we spend a lot of our energy tracking a lot of the private companies, throughout their life cycle. And so a perfect example is a company that recently went public in the US, Forescout Technologies. It's a data networking company. And that's a perfect example of a company that I would say whose heritage is Israeli. The chairman is a founder of another Israeli company, Top Image Systems. And while the company is headquartered here in the US, for us, we would classify that as an Israeli-related security.
Great, thanks. So how much time do we have left up here?
Like none.
No time? I want to talk quickly about something that obviously was a major point of conversation in the last panel, which was these high-tech mutual funds that are being established in Israel. And I want to talk about that from the angle of benchmark selection. And I think it'll speak to the momentum that BlueStar sees in our indexes being adopted as a benchmark for the Israeli tech sector. So from the perspective of an asset owner, the benchmark selection is, whether you know it or not, it's actually sort of a first step determining if you actually want to invest in a certain asset class. You want to invest in Israeli tech stocks or not. But it's also a critical component for how you judge the performance of your portfolio manager. I'm not talking about necessarily portfolio manager for a hedge fund or mutual fund, but people like Alon, people who are managing the pension funds in Israel and the insurance companies in Israel too. So I'll give an example. It might be a basic concept to some people here, maybe not to others. But if your portfolio account is up 15% in any given year. Okay, say your benchmark. If you're tracking Israeli companies, or that's your mandate is to invest in an Israeli portfolio. If your benchmark is one that does not include Israeli companies listed abroad, and that benchmark's up 10%, okay, we could say that 10% of your return attribution, or whatever it is, 67% of your return attribution, could have been achieved by investing in a low-cost index tracking fund. And only 5% can be attributed to the active manager or the skill that your portfolio manager is adding. Okay. If that manager is consistently investing in Israeli companies not included in his benchmark, so the companies that are not included in the TA-125, for example, sort of a misrepresentation of the value add of that manager. So if the benchmark in that same situation include maybe the TA-BIGITech Index or the BIGI Index, which includes Israeli companies listed abroad, say that index was up 12%, then the active component was reduced to only 3%. So the reason I think this is important is because these are real-life considerations that serious professional institutional investors in Israel are making. And part of it is that the high-tech mutual funds are going to have to select a benchmark for the public portion of their investment portfolio, but also pension funds in Israel are beginning to invest in non-TASE listed securities, not as part of their global portfolio, but they're considering it part of their Israel portfolio bucket. So as a responsible investment professional would, they're seriously considering changing their benchmark to be more inclusive and more representative of the actual investment style that they're trying to gain exposure to. And they're thinking about it in this way of what is the right benchmark that I should be reporting and measuring myself against to my investors. So when this happens, when BlueStar's indexes become adopted by more institutional investors in Israel, it's going to go a long way, I think, in helping bring attention to not only the Israeli companies listed abroad for Israeli investors, but also for US investors looking to invest in the Israeli markets in general. So I wanted to get that point out there. I'm not sure if you wanted to add anything about benchmark selection or not, but
I think we're short on time, so.
We're good. Okay. Thank you all very much. Oh, we're having our first coffee break right now, so go enjoy.